You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
All right, everybody. Welcome back to Education Wednesday. Man, we've been hitting you with a just slew of content coming at you today, including two episodes of Options Playbook Radio, what the cool kids call the old OPR. Of course, that's coming hot on the heels of a double episode palooza of Options Bootcamp, our other educational show here on Education Wednesday. If you're listening to OPR, you're not listening to Options Bootcamp, you're missing out. Very much sister shows in terms of educational initiatives. And we kicked it off this morning with the advisors option out there, talking about a whole bunch of great strategy and analysis and back testing there as well. Of course, if you want to hear all that the instant it goes out there to the masses, you know where to go. Theoptionsinsider.com/pro, or, of course, for all you cool kids, /secret club. All of you have already heard all that content today, and it's going to hit the pro podcast feed. The rest of you, unfortunately, have to wait until it hits the on-demand, which will be in the coming weeks out there. But we look forward to all of you sinking your teeth into it as well. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating network upon which so many of you are mainlining these days. And now if you're saying to yourself, that's not the usual host of this program, you are correct. So allow me to introduce your usual host, a.k.a. the options guy himself, Mr. Brian Overby, the senior options analyst over there at Ally Invest. Brian, welcome back to your own show, sir.
It's great to be back, Mark, and I always appreciate you jumping in and helping me with these huddle ups, because I got to tell you, the more that we do, the more I enjoy them. So let's get together and huddle up.
It's time to huddle up and answer questions about your favorite options plays. Submit your questions via twitter.com/options, facebook.com/theoptionsinsider, or questions at theoptionsinsider.com.
All right, everybody, welcome to the huddle. This is indeed the portion of the show where Brian and I unite like Voltron to take on all comers from a question perspective. You got to be careful there, Brian, saying you're having a good time, because the people will want you here live every week, sir.
Yeah, well, I'm up for that. But we still got to have the fodder behind the playbook so that we can generate more of these questions. That simple.
Yes, the people, if they hear you're having fun, because they're having a good time, they're loving the show, so they will take as much OPR. They want to inject it right into their veins, sir, every day if they could.
Well, I don't know where they are, but it's 5 o'clock somewhere. And guess where that somewhere is? It's in Charlotte, North Carolina.
There you go. Crack open a beverage and follow us down this rabbit hole. Speaking of rabbit holes, Brian, we've been polling the people of late to get their thoughts on what's going on with this crazy market rabbit hole we may or may not be in right now. Let's kick it off with our question of the week. Then I want to get to your poll in a second as well, because this week we've been polling our audience for a while. Obviously, we have a question of the week every week. If you're not playing along, not following us, listeners, you're missing out. Head on over to @options on Twitter to make your voice heard there. We've asked you for a while now, what are you guys up to? What are you feeling about this market, these levels here. And a lot of you have said you're a little bit nervous. It's understandable. A lot of you are in cash right now and waiting to, quote unquote, buy the dip. So we've asked you in the past, what level is it where you want to come in and buy the dip? And they usually said somewhere around 3,700 seemed to be the largest percentage of you. This week, we're flipping the script a little bit. As a corollary to that BTFD crowd, a lot of you are also waiting not just for the S&P to drop, but also for VIX to pop. Do you think that really signals concession in the broader markets out there? So our question of the week is along those lines. We're asking you quite simply, what level does VIX have to hit to signal concession to you in the broad markets? A VIX north of 40, a VIX north of 50, a VIX north of 60, or a VIX north of 70. Brian, I'm curious for you. Are you on board with that premise? Do you think VIX really needs to pop before we could signal the concession, the end of this aggressive sell-off, the end of the near-term bear market? So you on board with that, or do you disagree? And then B, if you do agree, what level do you think is, or should say, signals concession? And C, what do you think our audience is voting for? A three-fer, sir.
Okay, so the first one, I am definitely on board. As a matter of fact, we put out notes for the media every week, myself and Lindsay Bell, our chief market strategist. And one of the things that I mentioned was when the SPX first broke down below the 4,000 level, one of the things that was surprising to me was that the VIX never broke above 40. And to me, that wasn't a good sign. First of all, that we didn't even really pop at the 4,000 level, that we came down and just went straight through it, hung out there for a few days, got back up. The 4,000 level still was important and still is important. Those nice big round numbers in the SPX seem to matter because we hung out there for a while, and that we just seem to be trading around that number now. But I think it was very telling that the VIX just went, ho hum. We'll keep you right around, I think it was around the 35, 36% level at that point in time. And we just never had that big spike up. And to me, that meant that we just didn't get the capitulation, that this wasn't the spot where we're looking for, lack of a better term, the dead cat bounce in the market, at least, let alone maybe just a turnaround. Because we didn't get either of them. So, yeah, without a doubt, I'm on board. Second question was, what was the second one?
Oh, yes. So our poll
what
this
number?
week, yes, the number. So what level to you signals concession in the VIX? Is it north of 40, north of 50, north of 60, north of 70, or perhaps something else, sir? And what do you think our audience is voting for?
Right. Okay. So then that's the last one. So the 50% level, I think, would be important. Now, since the pandemic, we've only came close to 40. I'm doing this all from memory, about 4 times, I think, maybe 3. So it's very tough for the VIX nowadays to get up above that 40 level. I would like to see, considering what's happened in the markets, that we actually get closer to the 50 level. I think that's a good number where we're saying where we would feel comfortable. I would have liked to see the market come down to the 4,000 level and the VIX spike up towards that 50 level. To just show some of that fear in that marketplace from that big downturn. And that just basically means to me that a lot of people were getting out of the market. And unfortunately, for most retail investors, they usually make mistakes and get out, when right at the big turn. So that's my level, is right around the 50 level. And I think I'm gonna say 7. Well, you know what? Options Insider Radio listeners are different. I think they might be right at the 50 level too, because I think they're just more astute. I'd say the normal trader would probably want to see it around 70, but that's not even really that would be a huge shakeout. So we don't want the market to go down too much that we can't recover. And that's what I think the VIX over 70 would do. So I'm going to say that they're with me on it, right around the 50 level, the greater than 50.
It's a popular level. You're right. We just had Dan Passarelli in Options Bootcamp. He picked the 50 level as well. Let's see if the audience agrees with the two of you. And the answer is no, Brian. Almost 41% right now saying north of 40. So perhaps lower than you might think. Followed by almost a tie between 50 and 70. 70 is actually number 2 now, 24.8%. And then number 3, north of 50, 24.1%. No love for 60, Brian, only 10.2%. for a VIX north of 60. So there you go. So if you are a believer in that capitulation theory, listeners, then perhaps you want to get out there and make your voice heard right now. So far, a lot of you are thinking capitulation at not that lofty of a level compared to where we have been from a historical perspective in terms of from the pandemic highs, of course, not from going back to the long term. 40 is obviously very elevated on the long term chart of VIX, but from the pandemic, we have flirted with higher levels. Let's get on out now to some other polls. Actually, Brian, it's been so crazy out there on the vol front that you've been talking a lot of vol on your OPR show. In fact, you commissioned your own poll along these lines last week. You asked our audience last week, a bit of a flash poll during your OPR show. You asked the SPX 30-day straddle at the time was trading for around $240. Quite simply, would you rather buy it or sell it at that price? And nearly 2/3 of the audience, Brian, agreed with you. 62.1% saying they wanted to buy it. It was too cheap. Only 37.9% said they wanted to sell it. So, Brian, did that surprise you, or is that kind of what you expected?
Well, it does surprise me, mainly because, especially on OPR listeners, and not necessarily OPR, I should say just Options Insider Radio listeners, you have a lot of people that like to sell premium. And so I think the path of least resistance is the guess that they're going to want to sell premium as opposed to buy it. So I think the fact that it was 62% saying it's too cheap, I mean, I think that's very telling, because that's definitely, I thought it'd be closer to the 50-50 level. But yeah, I don't know if it's fair if they did the poll after listening to OPR or if they did it just blindly, because that's the reason why it came up. I mean, why? And on our podcast, not to spoil it, spoiler alert here, but yeah, we looked at looking at a strangle in the VIX as a viable. Maybe that's our next poll question, Mark. I don't know. Would you want to buy? Well, I guess you would just do the straddle, right? The at the money straddle, or would you rather sell it in the VIX? So I think we just came up our next poll question. So I'm amazed to see it at 62%. I agree with it too. I've been very, very confused by the VIX. It seems like the only thing in the marketplace right now that isn't volatile is the VIX index, with relative to the underlyings in the marketplace.
Speaking of your poll and VIX and vol, whether it's too cheap or not right now, we have a question here from BJM. BJM says, okay. Well, okay to you. He says, I liked Brian's straddle poll, and I agree that things are too cheap right now. But what do I do with that? Do I just buy the SPY straddle, or is that just too simplistic? Do I need to do some crazy spread strategy instead? Well, Brian, you kind of just touched on one of the things you can do. Yeah, we don't need to, well, actually, by the time this goes live, that will already have aired. So I guess we can spoil that because I'll have already heard it. But Brian, what was your trade you talked about on OPR this week, sir? Because that would be a good one for BJM to consider.
Yeah, well, we on OPR, I did discuss a strangle in the VIX. And I also just looked at buying a call, an out-of-the-money call, 30 strike, going out to the June expiration. And just because the VVIX index just broke below 100, which is the VIX of the VIX. So premium is cheap in the VIX with this marketplace the way it is. Just found that to be interesting. But the VIX is a different beast. You have to understand the ins and outs of it. And I talked about a lot of the ins and outs and things you got to be aware of when you're trading VIX indexes on the OPR podcast. But if you're saying about doing something crazy, yeah, just buying an SPY straddle, that's not too crazy to me. This would be actually one time, and I very rarely look at a strangle, but I don't mind if you go out longer term and look at buying an out of the money put and an out of the money call, as long as I'm doing it longer term. If I'm doing short term, I want to be in the straddle because one of those option contracts is going to be in the money. We want that delta to get to one right away. If I'm going out longer term, like to the end of the summer or so, I would consider doing a strangle in the SPY. And that's just saying that you think vol is low. Now, that's your trade, not mine. I'm not necessarily supposed to make recommendations on these things. But if you feel that way, very rarely do I ever talk about strangles, especially because a lot of people equate them with known news events. I don't like to buy out of the money options, for example, a strangle around earnings where there's a known event, vol is already pumped up, you're just ready to go. But if you just consider that either the market's going to go up, let's say, let's go 15% to the upside or 15% to the downside from here on out. Well, vol is low. Vol is low on the VIX. It's low on the VIX relative. In my thought, very rarely has the VIX even really been below 20 since the downturn in the pandemic. We've had some periods where we're below 20 in a very, very bullish market, but for us to be right around that 28% level with the VIX below 100. Just look at a VIX chart and just look at how long, how many different periods in time over the last, let's just say 3 years that the VIX has been below 100. It's really just not that often. So I think I'm going a little bit, I think I just redid my podcast, Mark.
Yes, a little bit of an amendment to the podcast.
Yeah.
Interesting stuff. It's a great question there. What was that? BJM, because you're right. You don't have to go crazy. We don't often recommend straddles here, but that is one way you could go about it right now. I mean, it's a hard trade to make work in normal environments, but these are far from normal environments. Brian also did talk about on his OPR about VIX call. That is another way to express a viewpoint on SPX volatility. So intriguing ways. You don't have to go crazy with. That's one of the lessons of OPR. You don't need to do ratio iron condor swaps. You can just go out there if you want to do a straddle or a straight, in this case, out of the money call purchase. Those things can function in these types of crazy markets as well. Speaking of keeping things simple, let's go out to Danielle next. Danielle says, this may be a simple question, but how do Ally and other brokers calculate how much money I have to set aside when I'm selling a put? Thanks. Yes, Brian. The voodoo, the magic that goes into margin calculations. I cannot think of a sexier topic, sir. Can you?
and it's definitely not a simple question. If you go into optionsplaybook.com, actually for every strategy, we set out the formula inside. It would be in the index in the actual book. But and I'm trying to get there right now, under the tab that says glossary, no, managing positions. Inside the option strat, I'm trying to figure out exactly where it's at. But yeah, that's the biggest thing that you got to check with every firm. We have general numbers inside the playbook as to what the margin requirement will be, but almost every firm is going to have a minimum equity requirement. And if you're truly naked and you're not doing it cash secured, the minimum equity is usually going to be around $25,000 or so in the account. Now, that can be part of your requirement. And then it's if you're doing the way the vernacular is written, and I'm grabbing this from Options Playbook Short Put, it's 25% of the underlying security value minus the out-of-the-money amount, if any, plus the premium received. Or 10% of the underlying value plus the premium received. Now, the Chicago Board Option Exchange has a calculator that does the exchange minimums. So this is by far not a simple question. Every single broker will put a twist into what they're going to do with what is called naked options. Now, with that said, Daniel, very straightforward if you're selling a put in a retirement account, a cash account. And inside the playbook, we have a strategy that is highlighted that is a cash secured put. It's under the Rookies Corner tab inside the playbook.com. And that is basically you take the strike price, you multiply it by 100. So if it is a $25 strike, you're going to have $25,000 to be, or $2,500. I'm sorry, I added a zero. $2,500 to buy 100 shares of that stock at that strike. So a lot of people like to do it in IRA accounts, just try to target a bottom because there's no minimum equity requirement. There's no 25% out of the money, all of that math that's behind it. So I hope that answers your question, but it is by far not a simple question.
Yes, I call it voodoo for a reason, Danielle, because it oftentimes can seem like that when you're breaking this down. Once people start trading a little bit more, these questions, I joked earlier, they're not the sexiest of questions, but they are very important. They impact how much capital you have to actually trade. So people eventually do learn that these questions are important. So it's a good question to ask, no matter who your broker is. If you have questions about that, hopefully your broker will spell that out in the terms kind of Brian just laid down there. It's a little bit confusing. It's kind of a greater or either or kind of thing. I get it. It's confusing. But hopefully they will at least spell it out. And if you have questions, you should contact your broker and say, hey, I put this trade on. Why did my options buying power or the capital in my account change by X? And they should be able to answer that for you. If not, you probably should check out another broker. Let's go out here to Alice. Alice, the analyst. Oh, I wonder what she analyzes. She says, hello, Brian. I very much enjoy your program. A nice bite-sized hit of options education and trading on my phone every week. I know that a lot of the talk last year was about the meme stock call frenzy, but now that the market is selling off, can we also say that it's now all about a put frenzy? Is that what you're seeing at your firm, or are customers still lining up to buy out-of-the-money calls? So, Brian, Alice, the analyst, wants to know, is it still a meme stock call frenzy, or are we talking about a put frenzy now, sir?
I actually, I'm going to say I don't know, because it, like you said, a lot of people aren't even talking about it. So I haven't really looked at meme stocks as far as what our clients are doing. I do know that the percentage of clients trading the meme stocks have gone down immensely, to the point that it's not even really a blip on the radar. So I don't know about the calls versus the puts, and I never used to get that detailed information. One of the things that if you followed the podcast that talked about, was one day I do remember talking to a reporter, and the GameStop or whatever had a big down day, and they said, well, is this over? And I do recall saying, well, we may think it's over as analysts, but if you look at where the options are being priced on the out-of-the-money calls, there's still a ton of skew way out of the money. And so the option prices aren't saying that it's over, even on the call side. And they were right. The option places were right, where a lot of the analysts were wrong, which usually ends up being the case. But with that said, I don't know enough to answer this question, so I don't want to try to make up an answer. I do know that the percentage, like the percentage of clients trading the memes, has gone down to the point that it's now a blip on the radar.
I will add anecdotally, obviously I'm not tracking the paper at Brian's firm or any of the major brokerage firms, but just looking at what we're scanning, what's coming across our scanners now. Last year was a lot of size upside call trading. Those are kind of fewer and farther between these days on our scans. It's a lot more puts. It's pretty much all puts all the time now, and for a fair amount of size. So anecdotally looking at that, we could certainly say that puts, I don't know if it's a put frenzy, but they are certainly far more active. You had to kind of look last year to find people buying puts. If they were trading puts, it was mostly what we call line in the sand puts, where they were selling puts at some level to try to either buy the stock at that level or just harvest some premium. So these days we're seeing a lot of put buying out there. So anecdotally, I can say, yes, looking at what we're looking at, it definitely is. Again, I don't know if it's a frenzy, but it's certainly more active. It's perhaps a frenzy adjacent. Certainly much more so than it was this time a year ago. Good question, Alice. What are you analyzing? What are you analysts for? Hit us up. Let us know. I'm curious. All right, let's go out to Mako. He wants to know, how far out do we go? In particular, how far out do you typically make your options trades? Oh, he has a twofer. He says, and are you trading any of the new daily expirations in SPX? So a twofer for you, Brian. First off, how far out do you typically go when you're making an options trade? And then B, he wants to know, are you slinging any of those new daily options in the SPX?
All right. So first of all, Options Playbook Radio is all about picking the expiration to go along with the underlying and the trade. So There isn't a golden book of answers. I'm gonna take the side that you're talking about, buying options. If I'm buying out of the money options, I'm gonna go out further in time, and that's mainly because time decay is such a big issue on typically buying an out of the money put or buying an out of the money call. If I would normally think about going out a month in time on a particular trade, if I choose that as my strategy, I may go out 45 days to 60 days, just for example. So if I decide that that's not the strategy I'm going to do, and I'm going to do a long call spread instead of buying an out of the money call, I'm going to then go shorter, mainly because when I buy a long call spread, you're buying one option and selling an option. The one you're buying on the call side wants it to go up, and the one you're selling on the call side wants it to go down. So they fight each other. So you got to be more accurate on your time forecast if you want to have the ability to max out on that trade. You need a lot of the time premium to come out of the sold option contract in order to get the maximum. So there isn't a typical, I guess if I'm buying options, I'm at least looking at a month. If I'm going out buying out of the money options, and maybe on a spread, I might look at 2 weeks. I guess that would be a typical, but it's very dependent on the underlying and how much implied volatility is in those option contracts when we're trading them. In particular, like, are we trading it around in earnings? Is it a speculative shot? Is it just a longer term strategy, a fear of missing out trade, which I've talked about many times on Options Playbook Radio. So there you have it. There's no golden book of answers is the short answer.
People may sometimes be a little bit misled by the show too, Brian, right? Because you're doing a lot of, especially during earnings season, you're doing a lot of very near dated trades, right? Because that's what's going on. That's what's interesting to the audience. They may think all of your trades go out in a couple of days or a week, Brian, but sometimes you play around with those time frames a little bit. And I'm sure in your personal trading, you probably go a little bit beyond that as well.
Yeah, that's true. And that is very true. Every week we come up with a strategy, and we couldn't just buy calls for 400 plus episodes, right?
That'd be a pretty boring show. Listeners. I'm buying another leap call in the SPX, come back in a year and see how it goes, right?
So earnings is a simple little thing to try to target from time to time. And obviously a lot of people, especially when you're talking about the FANGs and that's in the news and stuff like that. So we try to adapt to what the audience is interested in.
It looks like you folks are very interested in vol and VIX. We got another question along those lines from Mika, or maybe Micah. They want to know, VIX is over 30 again for the third time in a month. I think this came in last week or so. So obviously VIX has come off since then, Micah. It is about 28 and change that's where it went out today. So a little bit below those levels. But Mika or Micah wants to know, VIX is over 30 again for the third time in a month. I'm not sure what to do at these levels. I don't want to buy 40 calls, but it's feasible we can hang out around here for a while. So 25 puts or UVXY puts could be wasted money as well. What's a boy to do besides sit on my hands? Interesting, Brian, you kind of just talking about this earlier with your poll and with your trade in OPR. So Micah or Mika, they're a little bit stymied when VIX gets back over 30. They want to know, what should they do? They're afraid they might just sit on their hands. They're confused.
I don't know if there was really a question in there. I don't want to buy the 40 calls, so 25 puts. Yeah.
Maybe he'll like your OPR trade of the VIX 30 calls.
I think so. I think we're just going to leave it there. I'm not going to go into more detail, Mike. You're going to have to listen to coming up episode of OPR that's going to probably be out tomorrow, right? Mark, the 26th will probably be live.
It'll go out live tonight for tomorrow morning. So yes, you can get it pretty soon. So,
all right.
Yes.
So there you go. You're going to have to listen to that one, Micah, to get an answer to your question. That's simple.
Brian becoming a bit of a radio pro here, giving you a tease, Micah. So check out that episode. I do think it will intrigue you. If you're kind of wondering what to do besides sit on your hands with VIX around these levels, maybe an intriguing way to go with coming up on OPR. Unfortunately, Brian, that music means we have to go. We've concluded yet another Huddle episode. Man, time flies when we're huddling up here, Brian. But if folks are intrigued, they want to reach out to you with questions for future Huddle episodes, or maybe with questions in between episodes of our Huddle, where should they go? What should they do?
All right. Well, you can always email them directly to me at theoptionsguy@invest.li.com. I prefer that you actually follow me on Twitter and learn about all of these events. And my handle is @BrianOverby. And I want to say, Mark, thanks to you and all you guys do over at Options Insider Radio. And we'll be back at the same time, same place next week. Until then, may all the options you bought finish in the money, and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.